Welcome to the Recon Trader. In today's video, I will introduce you to Bybit. It is a derivatives exchange that allows you to trade crypto assets futures contracts with leverage. Now, you might be wondering, why would I add another exchange to my arsenal? There's an old saying, one is none and two is one. And the reality is, if Binance or one of the other exchanges I use were to go down or not be accessible, that would be my one, leaving me with none. By adding additional exchanges, that provides me with options if some catastrophe hit one of the other exchanges. In addition to, I don't like keeping too much of a balance on any one exchange. For security reasons, again, if it goes down, I don't have access to those funds. Now, since I brought up security, I do want to mention anytime I'm patrolling the interwebs, I have my armor on in the form of a VPN. I personally use ExpressVPN, and I utilize VPN to protect from hackers and in addition to protect my privacy. So with that being said, I'm never online without the protection of a VPN. Now, before we get too far into the weeds about Bybit, I do want to stress that the risk of trading crypto futures with leverage involves a high degree of risk, and you should carefully consider whether trading crypto futures with leverage is suitable for you in light of your risk tolerance and financial condition. So, with that all out of the way, let's get to it. Now, if you're not familiar with Bybit, they were established in 2018, so they're not exactly new. They're a new weapon for me, but they're not necessarily new to the crypto market. And in reality, Bybit is one of the fastest growing crypto derivatives exchanges. And if we jump over here to CoinGecko under exchanges and you go to derivatives, you will find that Bybit is actually ranked number 4 on the top derivative exchanges by open interest and trading volume. And so obviously Binance is the big dog, but they're right up there along with Binance as far as the top derivative exchanges. So now you know they have the volume or liquidity to handle your trades. So if we dive a little deeper into the security of their exchange, Bybit holds their crypto reserves, including their clients' funds, in multi-sig, secure cold storage, offline wallets, and in addition to, they operate their own insurance funds. So the fact the funds are not held in hot wallets, which means the funds would be online, the majority of the funds are offline and not necessarily accessible to hackers. The multi-sig feature is added security and requires multiple SIGs or keys to access that wallet. So as far as security goes, they have good practices in place. Now let's take a look at the fees that will be involved once you start trading on the platform. And it's important to note that the trading fee is actually based on the leveraged amount. So if your initial investment is $1,000 multiplied by, say, 10x leverage, then you're actually paying fees on $10,000, not $1,000. So you are paying fees on the leveraged amount. And as long as you are placing limit orders, you're basically a maker. You're creating orders and putting them on the order book. Your fees are actually negative, and therefore you are getting paid to create liquidity on the order book. And so you'll actually get paid 0.025% for providing that liquidity. Now, on the flip side, if you're placing market orders rather than limit orders, you become a taker. You're taking orders off of the order book. Your fee will be 0.05%. Now, these fees are pretty normal for the industry, so they're not super low and they're not super high. They are pretty much the norm for the industry. And then the other fee you need to consider is the funding fee. Again, because you're using leverage, leverage is basically a loan, and so you do have to pay interest on that loan. And so the funding fee is currently 0.06%, and that occurs every 8 hours. So every 8 hours, you'll be charged 0.06% on the amount you have borrowed. And once again, that fee is in line with industry standards. So if everything is sounding good so far and you're thinking about creating an account with Bybit, you will be glad to know they do not require KYC, know your customer information. You can basically get registered with an email or a mobile phone, set up a password, and boom, click register. You might have to verify your phone number or the email address by clicking on a link. Other than that, you'll be registered and ready to go. And I will leave a link in the description down below. And if you use my link, you'll have access to quite a bit in sign-up bonuses, including a $1,000 bonus depending on how much Bitcoin you deposit. Also, under the promotions tabs, once you log into your account under Rewards Hub, you will have access to what they call vouchers. And you can get $5 just for following them on a social network like Telegram. Or you can get $5 in crypto just for doing one trade on USDT trading pairs, which you're going to do anyway. So there's a lot of sign-up bonuses available after you join Bybit. So again, I will drop that link down in the description below. Now, after you've joined, you can jump over to your assets page under your user icon over here in the right hand corner, and this is where you're able to deposit your funds or withdraw funds. Now, another security feature of the platform is they actually review withdrawal requests, so that does take time, but it is an added security feature. And to deposit, you just simply click on deposit, choose the cryptocurrency you want to deposit. They currently accept BTC, USDT, ETH, EOS, and XRP. And as you can see, I've already made a couple deposits with BTC and USDT. And so now I'm actually ready to trade. And so to trade, I just come up to the trade tab up here at the top. And I can trade inverse perpetual contracts or just your standard USDT perpetual contracts. Now, if you're wondering what an inverse perpetual contract is versus your standard perpetual futures contract, it is a little different. Under the inverse contract, margin, profit, and loss are calculated and settled in the underlying asset. So if you're trading BTC USD, you'll be paid your profit in BTC, and at that point you're actually stacking sats and growing your BTC balance. Now, with that being said, your risk is actually greater when you're trading an inverse contract. If you are going long and BTC is going down, you're kind of taking a double hit on the fact that BTC is going down and your USD value is also going down. And so I would not necessarily recommend an FNG start out with inverse perpetual contracts. You're probably better suited to start out with a USD perpetual contract. And if you are new to trading futures contracts, they actually have a contract info tab. I suggest you read through all this tab. In addition to, they have a learn center that you can actually go to and learn. And I would highly recommend you take advantage of that information before you start submitting your funds to Livefire. Now, with that being said, I am going to submit some funds to Livefire at this moment. So under the USDT perpetual contracts, there is a list of different assets that you can trade, and I could select between BTC, ETH, ADA, DOT, UNI, AAVE. So a pretty good variety of coins. There's not hundreds of assets, but I don't trade crap coins. And the reality is a lot of these assets that are available are the ones I do trade. So in this case, we'll just go with BTC USDT, and we end up over here on the trading terminal. And you will notice that the charting software is actually TradingView software. So if you've done any amount of trading in the past, you'll be fairly familiar with TradingView software. Now, just right of the chart is your order book or your level 2s, and you can see the asks, the bids, the recent trades. We see Bitcoin trading a lot of green all of a sudden. And so you can utilize the order book for reading the tape, which is a leading indicator versus the majority of the indicators you use on a chart are lagging indicators. Now, moving along, we come over to the order form, and the first option is going to be the type leverage you want to utilize. Now, under the cross margin option, all your available balance of the corresponding margin account will be deployed to meet maintenance margin requirements and prevent liquidation. So basically, your entire account will be at risk. Now under isolated, which is the type of margin I select, only the specific amount of margin, i.e. the initial margin, is applied to the position, and therefore only the initial margin would be at risk in the event of a liquidation. And so I can select the leverage for both long and short orders, and in this case I can go anywhere from 1x all the way up to 100x, but I am going to stick with the 10x, so I click confirm. And so now my margin type has been switched to isolated, and my leverage has been switched from 100x down to 10x. Now with Bybit, I can actually hedge and have both long and short positions open, and that'll be a feature I test out in the future, so you might want to shoot that subscribe button so you don't miss that video in the future. But today I will just be opening a long position on Bitcoin. Now I recommend you do at a minimum limit orders. Therefore you are a maker and pay the lower fee, and in reality you actually get paid rather than paying a fee. Now the most common type of order most people place is market, which is kind of a mistake because you do pay the higher fee. But with the market order, your order is filled instantly, so there's that instant gratification. Now today, the type order I will be executing will be a conditional order. And a conditional order is activated only when the trigger price is reached. So I can actually set a trigger price, in this case, let's say 48,409, which would be a little bit of a pullback from the 48,483 we're at. And then you could have it just place a market order and it would actually buy at the 48,409, assuming it could fill the order at that level. Now again, I don't place market orders, I want to place a limit order. And so next I need to figure out the quantity that I want to actually buy of BTC, and I can either type in the quantity or I can select the percentage of my actual balance. And in this case, if I select 25% of my balance, and my available balance is right here under assets, total equity 1,000 USDT. So if I was to use 25% of that, that would be around $250 for my initial margin. And then that initial margin is what will be at risk, 250 USDT. Now the order value will be 2,500 USDT because I am using 10x leverage. And before I deploy the order, I do want to set up my take profit and stop loss. Now my stop loss, I would set just below the wick on this candle, so we'll call it 46.9. And for my take profit, I'm looking at prior resistance, which would be up in this area, and we'll call that 49,409. I could have also selected percentages like 25% on my take profit level, or like 5 or 10% on my stop loss. So let's go ahead and click open long. And after hitting open long, it will confirm that my trigger price is 48,409. The quantity will be 0.052 BTC. And the order value is 2,519, which is basically 10x my initial margin of 250 USDT. And then I have my take profit at 49,409 and my stop loss at around 46.9. And so now I go ahead and click confirm, and now my conditional order is in place, and just like that the order got filled. And so now I have an open position, and now you can see the take profit and the stop loss targets on the chart. And so that pretty much wraps it up. I'm just going to let this trade play out. And so if you like this video, do me a favor, spike a like. If you have any questions or comments, leave those in the comment section down below. I will drop a link to Bybit in the description down below. Don't forget to shoot that subscribe button. I will do a lot more update videos on the Bybit platform in the near future. And in closing, remember, never send your money into battle without first doing your recon. See you in the next video.